Hello everyone. Today in this video we are going to see the remaining configuration related to asset accounting and also few FI related certification questions. So the first topic in this video we are going to cover is asset depreciation. So normally the depreciation posting is a periodic activity that is executed during period end closing. The depreciation itself is calculated and stored in asset accounting component for each asset after any asset transaction or change to the master record that might influence the calculated depreciation. The system uses the calculated depreciation values when posting the depreciation, and depreciation is not recalculated for the execution. Calculation of depreciation is based on depreciation keys assigned to the asset per depreciation area. The depreciation key calculation is controlled through the calculation methods assigned to the key. The various calculation methods are listed here, but it was not explored. So base method, declining balance method, maximum amount method, multi-level method, and period control method. So if we check on the depreciation key, so each depreciation key is assigned with a calculation method. So we create new depreciation keys usually to comply with new legal regulations. In most cases, it is adequate to copy and modify an existing method and then assign it to the new depreciation key that is in turn copied from the closest similar depreciation key. You need to execute a recalculation of depreciation in cases in which a new key is assigned to assets. This will update the planned values of the depreciation. You can see the assignment of calculation method to a depreciation key. So depreciation change calculation. So if we change something to the depreciation keys or any changes with the transactions to the asset related values, the depreciation will get automatically change the planned values, and in the next depreciation run it will update the values as per the new changes. If the acquisition and production costs value of the asset changes in a year, example you do a partial sale, the depreciation posted already for the year isn't changed. However, the depreciation of the next period will be adjusted in accordance with the period interval definition. In the most common case, the new depreciation values calculated for the asset and the system will catch up the differences immediately in the following period. For example, if the value of an asset is reduced, the system will post less depreciation in the period of the reduction than the new periodic depreciation amount is calculated as to catch up with the increased depreciation posted in the prior months. Time dependent depreciation definitions. You can make time dependent changes to an asset depreciation terms, meaning you can define a new period interval from which date new depreciation settings are effective. The definitions you can make with time dependency are as follows: depreciation key, useful life, variable depreciation portion, absolute or percentage, scrap value. When using the time dependency, the system won't catch up or smooth the values over the remaining periods. In the depreciation area, allowed values are maintained, and any change to depreciation terms must always comply with the value rule definitions of the affected depreciation area. You can see the detailed depreciation area definitions for an asset. So if we click on more intervals, it will pop up this screen, and from here we can see from the date onwards that we have to use one depreciation area. From another date onwards we are going to use another depreciation area. We are going to mention that clearly in this part. So depreciation posting run. So how we are going to run the depreciation? So the depreciation posting run post depreciation to the general ledger accounts in financial accounting. The transaction debits depreciation expense accounts and credits the accumulated depreciation account for each asset and for each asset and depreciation area per account determination of the asset class. For example, if a company had 1 lakh assets, so it is going to post 3 lakhs line items, 1 lakh assets and 3 and not fully depreciated assets and 3 depreciation areas that post depreciation. So it will calculate 3 lakh document line items. So there are two major advantages of posting with this level of detail. There will not be any reconciliation problems, and it will be a single source of truth, which means we can blindly depend on the reporting. Depreciation will be posted even when some assets cause errors. The program posts depreciation for all assets that it can. If you re-execute depreciation for the period, it will only post to the missing lines for that asset that caused problems. If you have closed the period before the assets could be corrected, the system will adjust the depreciation. It will post double the amount in the following depreciation run. Beside one side of the depreciation posting is to an expense account, the system also posts to a controlling account assignment. Most commonly, this is the cost center maintained on the asset master record. The depreciation program is always executed in the background. The depreciation run can be executed as a test run online for 1000 assets. The test run can run for unlimited assets as a background job. Testing the depreciation run might be useful to find assets with errors before committing the actual depreciation run. Because the test run can be executed at any time and not only during the period end, you can start correcting problems early on. After you execute the depreciation posting, the system outputs a log, and you can select the detailed log option to see every line posted per depreciation area. A similar log can be produced for test runs as well. And now we check on asset year-end process. As asset accounting balances are made up of line items that are in Universal Journal, the carry forward for these items is executed through the balance carry forward program in the General Ledger accounting. The balance carry forward is executed usually near the very end of the current fiscal year or at the very beginning of the new fiscal year. To post to asset accounting in a new fiscal year, the balance carry forward must be executed successfully. In asset accounting, you can have up to 2 fiscal years open at the same time. The idea is that you open a new fiscal year with the balance carry forward and you close the previous fiscal year when the previous year is closed for any accounting transactions. If you already have 2 years open, you won't be able to post to your third year even if the balance carry forward has been performed for the new year. To close a fiscal year, you execute the year-end closing program. The program checks that depreciation is posted fully and there are no assets that contain errors. If the year-end closing program finds no errors, it blocks posting in the asset accounting for the closed fiscal year. If for some reason you need to post in your closed fiscal year, you can reset the year-end closing. You will need to close the year again through the year-end closing program. So this is the screenshot of year-end closing. So job template, job name, we can start immediately. It's a kind of job, fiscal year to be closed. Asset classes, assets under construction, company code, all the information we will provide to close the fiscal year. Now we check on asset reporting. Asset reporting is how you keep track of all the asset balances and transactions and can simulate depreciation values in future periods. There are two basic report categories: reports for individual assets and reports for multiple assets. We will go over the most important reports for each category. Asset accounting overview. With this app, you can view multiple KPIs and asset accounting reports in a single screen. The app can be used as a central operations and information hub. You can drag and drop cards shown to organize reports according to your priorities. You can utilize filters and built-in navigation links to related apps. The following is a list of the key reports the app displays. So it is asset balances, asset acquisitions, asset retirements, open purchase orders, asset transactions by period, depreciation to be posted, asset depreciation values, asset master work list, assets under construction, asset transactions, origin of assets. So these are the reports which is available under this app. Asset value report. The most important report for checking values for an individual asset in the Asset Values SAP Fiori application. It is similar to the Asset Explorer, which we call it in SAP GUI. You can get a complete overview of the planned and posted values of the asset per depreciation area and year. You can check and directly display the transactions posted to the asset in the year. You can see and drill down to the related objects of the asset such as cost center, general ledger account, supplier, and so on. You can also perform value simulations based on what if scenarios, for example, based on changing the depreciation key. In addition, in comparisons tab, you can compare values, plan and actual between different depreciation areas. Finally, you can view the details and valuation methods of the depreciation key assigned to the asset and selected depreciation area. Now moving on to asset balances report. The asset balances report gives you a quick overview of the balances for multiple assets. The range of assets, company code, ledger, depreciation area, year, currency type, and period up to which the value should be selected are mandatory fields when executing the report. So what are the mandatory fields? The range of assets, company code, ledger, depreciation area, year, currency type, and period up to which value should be selected or mandatory fields when you are executing the report. There are also many more filters you can add to specify the assets. General ledger account, asset class. The output displays various key figures such as APC value, depreciation posted, and net book value. There are pre-delivered key figure variants for different purposes. Using the navigation panel, you can easily add or remove report characteristics to rows and columns. You can also export to a Microsoft Excel file for further calculations. Asset history sheet. The final report to remember is the asset history sheet. This sheet is a legal requirement in some countries, and SAP offers predefined layouts that cover the local legal requirements for those countries. The report application itself is like asset balances report but uses a specific key figure group and is more focused on showing the changes to asset values within a year. You can create your own key figure groups in customizing. So as asset legacy data transfer. So how we will transfer the legacy data to SAP. So the data migration of legacy data from a previous system to an SAP S/4HANA system is a very important process in which you must match the settings of your old system, whether an SAP ERP, usually the use case, or a non-SAP system. You then usually use a mass transfer method to perform the actual data migration. Migration preparation customizing. To prepare for data migration in the system, you perform the following customizing steps. First, we need to ensure the company code status allows data migration. This is allowed only when the company code is set to status 1 or 2. That means asset data transfer not yet completed. Test company code with data transfer always allowed. So if the status is 0, what you set for productive company code to ensure the data integrity is protected for accidental migration activities. So we want to make sure the company code status is 1 or 2. And the other thing is we need to define the offsetting account for legacy data transfer. In this customizing activity, you specify the general ledger account used for transferring asset balances. The asset offsetting account is assigned in a financial statement item with other accounts for the legacy data transfer, such as other general ledger account balances and customer or supplier open items. The total of all accounts for the legacy data transfer must balance to 0 when all migration activities are complete. You define the document type to be used while posting. In the standard system, document type UE is predefined for all migration activities. So what actually we need to make sure is the total of all accounts for the legacy data transfer must balance to 0 when all migration activities are complete. So you define the document type to be used while posting. So in the standard system, document type UE is predefined for all migration activities. You define the takeover date per company code. This is the date of the last period closed in the legacy system. Up to this date, SAP S/4HANA uses the values from the legacy system. From this date forward, SAP will calculate its own values. So mid-year, if the migration takes place mid-year, you define the last posting period in a second customizing screen. If the migration takes place in the mid-year, we will define the last posted period in a second customizing screen. So company code, period in which depreciation was posted, so all the depreciation areas, and year and the period, mid-year asset takeover. So how we will perform? The process to manually create a legacy asset is similar to the one for creating assets during normal operation. The main difference being that you must enter the capitalization date manually and input the original asset which corresponds to the asset number in the legacy system. The transaction is also different in this case. It is AS91 accessed through the SAP GUI. So you post the transfer values using a separate step, ABLDT. The system posts a separate universal journal entry for taking over values of each asset, debiting the asset account, crediting the accumulated depreciation, and crediting the remaining balance to the offsetting account defined. So these are manual takeover values. In an actual project, you would generally not perform a manual migration for assets unless the number of assets is extremely limited. For this, in addition to the manual transfer, the following automatic transfer methods are available. Legacy data transfer using Microsoft Excel, AS100. Legacy data transfer using LSMW. In this case, you often perform a screen recording of the manual transaction and upload a file for batch execution. Legacy data transfer using BAPI. In this case, you create a custom program together with a technical consultant. So these are the few methods which we use to transfer the legacy assets to the SAP S/4HANA system. So now let us see few questions. Which objects can be posted to by more than one company code? So we can use depreciation key for more than one company code. We will use useful life, means year or period, for more than one company code. Variable depreciation portion for more than one company code. Depreciation start date is unique for each and every asset or company code. Which of the following methods does the depreciation key define? So it's multi-level method, period control method, and base method. Which of the following parameters can be changed on a time dependent basis? So it is depreciation key, useful life, and variable depreciation portion. Which of the following are the different history sheet groups that each version of history sheets can contain? So it's mainly the acquisition values, reposting values, book values at the end of the fiscal year. What checks does the year-end closing program perform? So depreciation list and asset history sheet, no. Assets are complete and error-free, yes. Depreciation and asset balances are posted in full, yes. Last fiscal year has been updated. Actually, it will check, no. So these are the two things, and with this I have completed the asset accounting configuration part. So we will meet with a new topic in the next video. Thank you so much. Thank you so much for watching.